Hello and welcome to yet another episode of Evening Crypto with your host, your boy, the Real Shaw 256. Thanks for being here. Thanks for joining again. Welcome. And tonight, I want to ask a question to you all. Since when did the cryptocurrency community become such a fan of the repo market? When did we become such a strong fountain of knowledge regarding the repo? It is overwhelming the amount of people talking about this in crypto Twitter and around the webs, in the many different social platforms. People are just very opinionated about the repo markets and what transpired in the last, say, week or so with the Fed, not referring to the cut of the rates as we did see today, earlier today. We did see another quarter of a percent rate cut from the Fed, but that's not what we're talking about here. We're talking about the repo market. Practice? We're not talking about practice. No, we're talking about the repo market. So, question is, yeah, when did we become such experts on this matter? I have to be honest with you, it really piqued my interest. I knew a small amount or enough to be dangerous with the subject, but so I decided to dedicate this first part of the video to just that. Let's get some education. Let's get some understanding on what repo markets are, what they do, how they function, and then kind of give you a backstory on what's been going on, why this is such a wild and crazy topic around the crypto sphere, in the last couple of days, maybe. Yeah, if you've been following the crypto sphere. So taking a sip of water to get ready for this episode. There's going to be a lot of babbling, but, but I am going to try to keep it as efficient and short as possible. Get you the most information, and we'll also talk about the recent altcoin pump. Can this hold? Is this a long-term pump? We'll get into that here in just a minute. But first of all, let's do a recap of the market cap. We're currently at 270, almost and a half billion market cap. 24-hour volume is sitting at 63 in the last 24 hours. Bitcoin dominance is down to 67.8. Not too worried about that. 67.8. Yeah, it's a drop. Yeah, let's just call it 2.2% drop in the last week or so. Not too crazy, right? Not something to really get overly excited about. So I do encourage everyone to, cross your T's and dot your I's, or vice versa, because there's again a lot of misinformation out there. People just going crazy, calling for the altcoin summers here, and we're still a bit away from that. Anyway, so that's currently where we're at. Let's actually get into what this whole repo market is and means. So just by doing a little bit of research here, the so-called repo market is where two sides meet. Repurchase agreement make up an essential esoteric piece of the financial plumbing by providing a place where assets can be pawned for short-term loans. A healthy repo market helps a wide range of other transactions go more smoothly, but a repo meltdown was a crucial part of the financial panic in September 2008, and the US Fed and other regulators have put in place new rules meant to reduce the dangers. Many market participants think the changes may be creating new pitfalls. Meanwhile, the Fed has entered the repo market on massive scale, using it as a tool to guide interest rates higher. All right, this is sort of a older article here. But let's look at what is a purchase agreement, right? A purchase agreement, repo, is a form of short-term borrowing for dealers in government securities. In the case of a repo, a dealer sells government securities to investors, usually on an overnight basis, and buys them back the following day. For the party selling the security and agreeing to purchase it in the future, it is a repo. For the party on the other end of the transaction, buying the security and agreeing to sell in the future, it is a reverse purchase agreement. Okay, so hopefully that is starting to make a little bit of sense here. So furthermore here, purchase agreements are generally considered safe investments because the security in question functions as collateral, which is why most agreements involve U.S. Treasury bonds classified as money market instruments. A purchase agreement functions in effect as a short-term collateral-backed interest-bearing loan. The buyer acts as a short-term lender, while the seller acts as a short-term borrower. The securities being sold are the collateral. Thus, the goal of both parties' secured funding and liquidity are met. All right. So now that you've gotten a little bit of understanding of what this repo market is about, let's actually look at this article from Reuters. I'll leave the link to this article here in the description down below, so you guys can check it out and read the whole thing. Right. So here's a very interesting part that everybody's talking about. Right. You see everyone going crazy about the Fed printing $125 billion over the last week or so, further diluting your dollar, your value. Now, to put this into context, the 2007, 2008 bailout included about $800 billion in a state of turmoil, in a state of emergency. The federal government was trying to bail out a conglomerate of banks to the tune of $800 billion. We see the Fed over a span of a week, under no legitimate sign that we are in a recession or that we need a bailout or that we need any sort of interference from the federal government or the Fed in this case. And they are, just like that, printing $125 billion out of thin air. Now there's $125 more billion at the Fed for liquidity purposes. So they press the button, they print the $125 billion, an eighth of a trillion, to put it in another way. And that equates to somewhere around 22 to 25% of the entire bailout. About 20% of the bailout. The entire bailout. I mean, when the U.S. economy was in crisis, in a complete disaster, that was a declared, right? That was a declared catastrophe, financial catastrophe, and the government, the Fed, had to provide $800 billion in a span of several years, maybe a couple years, 2-3 years. We see the Fed printing $125 billion in a week. Great stuff, great stuff. I'm being facetious if you know me. So further, what it's really saying here is the Fed has run out of funds to lend back to banks, and that's why this whole thing came about. So the exact cause of the squeeze is a matter of some debate, but most market participants agree that two coincidental events on Monday were at least partly to blame. First, corporations had to withdraw funds from money market accounts to pay a quarterly tax bill, and on the same day, the banks and investors who bought the $78 billion of U.S. Treasury notes and bonds sold by Uncle Sam last week had to settle up. On top of that, the reserves the bank parked in the Fed and are often made available to other banks on an overnight basis are at their lowest since 2011, thanks to central banks pulling of its vast portfolio of bonds over the past few years. Added together, these factors are testing the limit of 2.2 trillion purchase agreements, or repo market, a great but essential component of the U.S. financial system. So, why is the repo market important? The repo market underpins much of the U.S. financial system, helping to ensure banks have the liquidity to meet their daily operations needs and maintain sufficient reserves. In a repo trade, Wall Street firms and banks offer U.S. Treasuries and other high-quality securities as collateral to raise cash, often overnight, to finance their trading and lending activities the next day. Borrowers repay their loan, plus is typically a nominal rate of interest, and get their bonds back. In other words, they purchase or repo the bonds, right? So looking down here, what caused the drop in the bank reserves? coming out of the financial crisis after the Fed cut interest rates near zero and bought more than $3.5 trillion worth of bonds, banks built up a massive reserves held at the Fed. But that level of bank reserves, which peaked at nearly 2.8 trillion, began falling when the Fed started raising interest rates back in 2015. They fell even faster when the Fed started to cut the size of its bond portfolio about 2 years ago. Fed stopped raising interest rates last year and cut them in July and again on Wednesday. It has also now ceased allowing bonds to roll off its balance sheet. The question vexing policymakers now is whether those actions are enough to stop the downward drift in reserves, which are a main source of liquidity in funding markets like repo. The bank reserves at the Fed last stood at 1.47 trillion, the lowest level since 2011, nearly 50% below their peak from 5 years ago. Right, so I'll leave it at that. Plenty of information here for you guys to digest. Definitely, let's comment on this. Leave your thoughts in the video. Don't leave your thoughts in whatever Facebook or Twitter, whatever group you're following that you're clicked on this video. Make sure you leave it on the YouTube video platform itself, so we can keep the conversation going in one spot. Okay, so you've got a squeeze coming from the Fed reserves. Not enough reserves in there to manage all the operations in your typical, bank, Chase, Wells Fargo, whatever the U.S. bank, whatever the case may be, Bank of America. That's where all these banks go to source their funds, right? So you can pull out your money. Banks can run their essential operations, whatever, blah blah blah. Now, what would happen? What would happen if, say, 50% of the U.S. population that owns a bank account decided to suddenly take their funds out? I hope that you can start to see how serious this issue is. So, like I said, I'll leave this down below. Let me know your comments. Yeah, let's do that. All right, so let's now jump onto the charts. Actually, if Gavin, I want to give a shout out to Gavin, Ether Gavin, for providing this very insightful and very easy to read article on what has been going on. So thank you, Gavin. If you're not following me, please do so. I will give you a follow back. Thanks for that, Gavin. But now let's step away from that. Let's get into the charts. I do want to start off with Ethereum because, gosh, guys, like, not to toot my own horn here, but man, sometimes it is amazing how these calls end up playing out. I gave you guys this target last night, I believe, or the night before, at 216, and my gosh, it hit. To be honest, I did have a lot of confidence that it would hit that. We would see at least 206, or I'm sorry, 204 be hit. That was a given. 203, 204. That was a given. And then, the next target would be 216. And then I told you guys we certainly would retrace from there, have a correction from there. And man, did we call that one right. So if you've been following the channel, good for you. Hopefully you got in on this. If not, make sure you hit the subscribe button, hit the like button, hit the notification button so you get notified when I put out this content. I do try to give you guys my best guesses on these, and that's really what they are. They're my best guess based on the information provided here in front of us. So hopefully you are taking advantage of that. So is this going to sustain? Is this pump really, the altcoin summer that we've all been waiting for? Well, is it? Look at the volume profile on here, and you be the judge. Let's actually go to the 1-day chart. This will give us a better look. So we're still within this descending trend here with the volume. Yeah, we did get above the exponential. Great stuff. Good. But I mean, just look at the descending volume trend here. And if you look at the scheme of things, if you look at in the grand scheme of things, this is the kind of volume that you want to look for. This sort of volume, this sort of volume. Now this here pales in comparison to this here and this here. So, and I mean, we've peaked out so far, right? This is, you can say that we've peaked here at this resistance line, and then we've actually corrected from there. So, if you want to call an altcoin summer, we need to see this type of volume here, the kind of volume that got us away from these all-time lows into yearly highs here, back in, for Ethereum, that was back in May 11th, May 10th. That's when you know, we saw the big run up in Ethereum. For Litecoin and others, it was a little bit sooner. Bitcoin certainly was sooner, but this is what you need to look for. So pay attention, because unless we see an uptake in volume like we did see here, then, you know, I don't think we're quite ready to call a market reversal, and altcoin summer is here. So pay attention, be careful out there, guys. I told you guys to start taking some profits at 216. Hopefully you've already done that. Hopefully you've already taken your profits, and if not, this is still a good place to do it. It's still a darn good place to do it. We definitely want to see if 204 is going to hold. If it does, then, you know, we'll have to reassess from there and see what happens. But as of right now, on the daily chart, it looks like it's fizzling out. We did have plenty of gains there. In fact, let's put a measurement move on this pump from back here to up here. It's almost 30%, guys. I mean, it's 28%. So, I mean, not a bad week in trading if you've been, you know, if you've been actively trading these altcoins, right? We do see the RSI actually taking a turn to the downside and actually getting into the neutral control area with some conviction. It looks like it's currently sitting right on top of the 21 here exponential. So we'll have to see in the next few hours if we do actually get down below the 21 exponential there. If we do, we are going to come back and definitely see some retest of these levels here at, call it 195 and what's this, 187, 188. If we are to continue upwards, I don't want to see the price of Ethereum go below 203 here, where the 21 and this previous line of support is coming in. Let's switch that over to can we do it? There we go. Because this is now support, right? It's coming right at where the 21 is. 21 is always a huge indicator for when you want to stay bullish or maybe have a change of mind. That's always the first indicator, right? If we are above the 30, then you know that things are looking pretty darn good. All right, so a couple things to look at. 203, 204, key area of support. The 21 on the 4-hour will also be key area of support. Let's look at the daily again. Same thing for the daily. And here's another thing I was giving you guys a couple days ago. The 200 was a key metric there. If we were to get above the 200 EMA here and close a daily, open and close some daily candles above it, then certainly we would have seen the price of Ethereum continuing to the upside. We would have seen continuation. So far, it is a rejection of the 200 EMA here. So again, the right here and the right now looks like a retracement and correction. It looks like we're due for some downward price movement. Again, look at the daily chart here. Look at the volume. Big indicator, right? I mean, this sell-off here, this correction here in Ethereum, and this pump here coincide as far as volume. This even has more volume, so it was a more vigorous move to the downside here back in July 14th, middle of July, versus this pump right here. right? And we did see continuation through the downside, right? So we should see an uptrending of volume here if we are to call a continuation here. So far, things are not looking that great. It does look like we're painting a red daily candle, but it's too early to tell. This is a brand new daily candle as of an hour and 55 minutes ago. So we still have plenty to go with that. All right, let's look at Litecoin. Again, sometimes I scare myself. Litecoin, I was telling you guys, if you watched my previous two videos, that we might actually get above this area of resistance here, but then come back and re-enter it. And gosh, guys, like look at it right now. It's actually coming back into this formation here. Not a good sign, although we're not ready to get bearish on it since it is retesting the 30 currently on the 4-hour chart. Retesting the 30 again. If we come back down below the 21 or the 200 here, coming almost in confluence here, then that would be a terrible sign for Litecoin, and we most likely are going to come back and retest the bottom of this area here at $68 or around $68, $69. Right. RSI looking like it does want to have a correction to the downside. We might get a bounce off the 21. Certainly, if everything else starts to run, I don't see why not. Litecoin would actually join in the fun on that. So keep your eyes peeled and see where this is headed. If we do, again, cross the 21 EMA here on the RSI to the downside, then we should be coming back down to the bottom of the support area in this formation here. All right. But so far, I mean, again, it doesn't look good that we're below and back into this upward channel here, which also could mean a bear flag. So if we come back in here and start opening and closing some 4-hour candles within this range, that's not going to be a great sign. All right. Let's look at the daily. Yeah, I mean, confirmation there. We opened up this daily here way above it, and we saw a little bit of continuation, but rejected by the 200 here EMA on the daily. I mean, we didn't even get to test it, right? So that's a bearish sign in itself. We didn't even come as far up as to have an actual test of the 200. We got rejected prior to it, and coming back down into this formation is to me is not a good sign. It's not a good sign. Again, we also confirmed that the volume in Litecoin is definitely, again, having the same sort of trend as Ethereum on the downtrend. Look at this again. Look at this pump volume here versus this here. This pump volume here versus this drop volume here versus this pump volume here versus this pump volume here. So I mean, you can start to tell that it's not much of a pump, right? Certainly, Litecoin doesn't look like it's doing a whole lot. All right, let's take a look at Link. What do we see in Link? Same thing. I mean, look at this massive amount of buying pressure here. I mean, just massive, right? And you do see it here reflected on the price action. I mean, look at how high we got here, $3 or $4.62, something like that. Let's see, what was the high? The official high was $4.58, right? So that's what you want to see. That's what you want to look for. Look at this. Now, as far as Link, does not look to be completely over on this run at the current moment. It's actually, so we're looking at the daily. Daily's still telling us that there's plenty of room to go. But again, we do want to see an uptick in volume here. Otherwise, I think we're going to fizzle out. Maybe here at the 55 where this $1.97 is coming in at. If again, I want to see some volume if we are to call that. We're actually going to move this line of support here and scale it down just a tad, and we're going to change that to red. That's going to be our next target, $1.97. If we do get above that, then we can definitely say that we are going to probably likely come back and retest the 200 simple up here at $2.29. Again, we need to have that volume first and foremost. Right. Daily, it's looking pretty strong as of yet. Does look like it wants to reach up to the 55 and the 89 EMA there. Let's look at the 4-hour. Let's get some of these things out of here so we can have a cleaner look. All right. All right. So, yeah, I mean, it's not looking too shabby, right? From the 4-hour perspective. Once we zoom out, though, I mean, you can really start to tell what we're talking about, what we're working here. I mean, look at it. It's almost non-existent here. This pump can barely be seen if we zoom out, right? So again, hopefully you guys are getting a little bit of perspective on this, because I don't want you guys getting wrecked on these markets. You entered down here, anywhere, even on the breakout point here at $1.67, good for you, but it's now time to maybe start taking some gains. We're currently at the 200 on the 4-hour. That's a great sign. Are we going to get rejected? We should know. We should find out here in a little bit. Let's look at the 3-hour real quick. It's getting above it. Let's look at the 2-hour. It is above it, closing some 2 hours. But again, these are 2 hours. This is where it really starts to matter. 4 hours, right? If we can stay above it and keep opening and closing 4 hours, 4-hour candles on top of it, now we're talking. And we need to see some volume with it as well, right? We're definitely above the exponential here on the volume signature, but again, we need to see continuation of that volume and actually increase a little bit here. Even if we stayed to par with this trend line coming in here too as well, call it at right here, right where my cursor is. If we get some of that sort of buying volume, buying pressure, then we could come back and possibly retest 197. So pay attention to the next few hours. See what that actually ends up playing out. But again, if you started here 167, this is not a bad place for you guys to start taking some risk off, and just wait to reevaluate and see where we're going to go next. All right, so let's take a look at BNB. BNB is already looking like it wants to, like it had that correction move to the downside, retesting the 55 right now. Let's see where that ends up panning out. Look, we did actually break out of this formation here. Great sign, obviously, and currently testing the 55. I don't want to see this come back and retest this area here. I do want to see a bounce here if we are to remain more on the bullish side, and I also want to see a bounce off the 21 exponential here on the RSI. This is again the 4-hour. If we are to have any sort of continuation, and the third sign you need to look for, yep, you guessed it, volume. Yep, let's zoom out a bit so you guys can start to see what we're working with, what we are working here with. Again, that descending volume signature is there. We definitely want to see more volume. So far, it's funny. BNB has pumped quite a bit. Let's actually put a measurement on it. Has actually pumped quite a bit, total about 16%, but the volume looks the weakest out of every other altcoin we've taken a look at so far, right? Just very shallow volume here, or buying volume there. All right, let's look at XRP. XRP had a really nice, really nice run, unexpected on my end, completely. Didn't think that XRP had it in it, but I mean, to my surprise, a 28.30% run, not a bad day altogether. I didn't do too much analysis on XRP because again, I wasn't thinking that it might do this. But I mean, textbook, just retesting this area of support, previous area of support right here at 29 cents. Again, historically, this has been just a hugely meaningful area of support here at 29 cents. Hugely. If once we get above it, it's a good sign. Once we get below, it's a bad sign, right? It's very black and white for XRP. And look at it actually having a bounce. We might get above the 30 here. If we do, then we could say that there might be some continuation. But look at the volume here, though. I mean, just no volume here whatsoever for the longest time since, let's just say, July 19th up until last few days. So this is pretty good, even though we're still on a descending trend here. It's good to see this on XRP because we hadn't seen any sort of reaction for a long time, and it's just good to see that the XRP army still alive. All right, so trying to get above the 30. If we do get above the 30 here, it's going to be a great sign for XRP in the next coming hours. But just having a natural correction there. The RSI is looking like it wants to retest the 21 here. Hopefully we get a bounce there, and I mean, we might. I mean, based on what we're seeing here on the 4-hour, we might actually get a bounce there. So, not a bad thing there. Not a bad thing at all. Let's look at 3 hours, see how that's looking. One of these is going to get it right. I mean, we did have this here, this area of support here previously drawn, and it's actually working. Let's look at the 2 hours, see what the 2 hours telling us. Yeah, I mean, 21 coming in right there. As I mentioned before earlier today, we don't want to close below. We don't want to have meaningful candle closures below the 21, and we are actually respecting that as of right now. Opening and closing above it, good sign. We could have continuation again. Look for volume. The 2 hour though, 2 hour, it's gonna have to put in some work here on the upward side if we want to turn this RSI around. Otherwise, it's just gonna be swimming against the current here, and that'll be tough. That'll be tough for XRP. We definitely need some buying volume to come in here and pick this up. All right. Otherwise, again, pay attention to the RSI because this is what and the volume is what is going to tell us where we are headed. All right, let's look at a couple more. ADA had a really nice run as well. Get a measurement on it. About 24%. Let's round up. Again, respecting the 21 here on the 2 hour. A lot of these things are going to coincide because, again, a lot of this is also algorithmic bot trading. So no surprise there. Respecting the 21 like XRP is doing on the 2 hour again. If this actually carries on to the 4 hour, that'll be a good thing. But again, look, we got down below the 21 EMA here on the RSI. We want to see this thing turn around here if we are to remain bullish. But again, as long as we're above the 21, we're still in business. All right, so not too shabby there. Let's look at the 4 hour, respecting the 30. Great sign there. That's a really good sign. A long way to go to retest the 21 on the 4 hours. So as long as we remain above the 30 here, and with, again, you guessed it, with some volume, we can continue on. I like the volume signature surprisingly on Cardano. Cardano is actually one of the strongest moves. I mean, look, we see not quite a rounded bottom, but I mean certainly nice volume signature. I mean, one of the strongest pumps in comparison to bigger moves. Yeah, I mean, let's look at the top of, just this usage trend line here. Yeah, I mean, I like it. ADA is looking pretty darn strong, and if we can continue this sort of trend here, we could have continuation. See, 4 hour again, respecting the 30, 10 simples coming in there. We did break below the 377 on the 4 hour, but I mean the 377 is always like the best case scenario when you're coming when you're turning things around from being below these moving averages and turning that around and going to retest some higher prices. The 377 is always usually on a downtrend on a bear market will be something you don't want to get past, but then on a bull market you definitely want to get past it, the 377. So great stuff there from Cardano. Like I said, this is probably looking like one of the strongest running coins there. Pay attention to it. We're currently retesting the 21 EMA here on the RSI and retesting the 30 on the chart, respecting the 30, which is again is really good sign. If we are to come back and retest the 21, don't panic yet, but certainly hope you've already taken some profits at around 0.05 cents. Let's see, take a quick look at the 2 hour. Yep, respecting the 21 as well. I mean, again, a lot of algorithmic trading here, so things are going to look pretty similar to each other. Let's look at VeChain real quick. Oh man. Okay, a little bit of bearish divergence here. between this point and this point. Bearish divergence, and there's no volume. So if I had an alert button, I would be hitting it, tapping it like a madman right now. V-chain just, I don't like V-chain right now. Nice pump though, don't get me wrong. If you haven't taken your profits, even at this point, is still a great point to take profits, 23% altogether from 14th of September. Look at the RSI. I mean, just getting deep into that neutral zone and urging to get into the bear control area here. We closed and opened a 4 hour below the 21. There's a lack of volume, bearish divergence on the 4 hour, 2 hour, sorry. On the 2 hour, did we get bearish divergence on the 4 hour? No, we didn't. We did not. So the 4 hour is defending this bullish trend, but the 2 hour is telling us there is some bearish divergence to pay attention to. Let's see what the 1 hour is saying. Is the hour saying the same thing? Look at this peak here. Yep. You betcha. About this here. Yep. I mean, it's just been calling that. I mean, this is a, I mean, it doesn't get any more pronounced than that. I mean, look at this downward trend on the RSI, an upward trend on price action. Bearish as it can get as far as diversion goes. Let's look at the 3 hour. What is the 3 hour saying? Whoa, did not mean to do that. Ugh. That was terrible. Jesus. All right. Well, I mean, we were done with the charts anyway. Sorry about that, you guys. On that beautiful note, we'll call it a night. Definitely want to hear from you guys. Let me know what you guys are thinking. If you guys are enjoying the content, hopefully you got something in exchange for your time invested here. And again, please remember to hit the subscribe button and hit the notification bell so you get notified whenever I do put out these videos. And let me know how you guys are doing. Let me know if these trading ideas are working out for you guys. All right, would love to hear from you. All right, signing off, your boy, The Real Shot256. Follow me on Twitter, The Real Shot256. We'll see you guys on the next one. Great night.